Hello, 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 everyone. Mike Arnold here, co-founder of Pat Trading Partners, along with Bob Iacino. How is everyone doing? Hello, Waka Waka. Good afternoon, Amit. Rally over, nothing to see. Well, we'll see if it's completely over. Good afternoon, Wavy. Everything is fine. Nice fake out on the on Tesla back into the wedge with a double top on 1 hour. We can take a look at that. Midday push gave me some hope for a power hour rally. Boy, did that go way fast. The midday push was great after that 4 hour trigger on the double bottom allowed the position to be got in to be entered on a much better level. And then with the turnaround, thought that was a gift. We do have double bottoms still on the shorter term basis, so I'll have to keep an eye on that. Good afternoon, AP's Worlds. Hello, Christoph. Good evening, Anissa. Still busy. Well, Sterling's still busy, everyone, so we won't bother Sterling. Hey, Lauren. All right, so if you are new here, please do consider subscribing, ringing the bell, and hitting the like button. Longer term viewers, you already know what to do with the comments and the likes, so I'll leave it at that. Good afternoon, Davey. So, all right, little red day, pullback day. Some of the mega caps, especially Tesla, was leading stuff on the way down. Guess people don't like the way it's headed with the lawsuit with Twitter and the breakup. Twitter also heading down, finishing that double top pattern. Tomorrow, there wasn't much today. We had a couple Fed speaks. Tomorrow, it's going to be interesting just to see the business optimism index for June and consumer inflation expectations, but we also have Barkin speaking. But there's not a lot that's really going to rock the markets. That comes on Wednesday, potentially. FOMC still 93% on that 75 basis points and still a negative gamma. So let's see where else. Did I say good day, Davy? Afternoon. The market's on cracking ice. We shall see. This isn't anywhere near a capitulation. A capitulation. Coco, I will let you know if we get a capitulation move. This is just a down day. My goodness, this is nowhere near a capitulation. Hello, Patrick. I think we'll rally if CPI is better than expected. You know, I've just got to play the technicals. By the way, they're already warning the White House spokeswoman. I expect new CPI data to be highly elevated. So, I mean, there's a chance that the president could get the data early. I don't know about that, but they're already coming out warning on CPI data, so it could be a surprise to the upside. All right, so let's take a look at some stuff with the markets. Again, let's start with that daily. Sorry, I jumped over. Starting to get that rollover move on the cycles, especially with this down close day. So, and weekly are still at the top, so not yet rolling over, and we're still against the weekly rotation zone. The thing today, we had that 1 hour trigger. Then we finally got the 4 hour trigger. That was a really strong trigger. The 4 hour trigger, since it was a 4 hour double, and you know how I like to then watch for the retracements back into between the where it triggered, the base and the candle bodies, and you can see those retracement levels gave multiple opportunities to get back in that area before the rollover. Now this is a potential double on a 1 hour. On a 1 hour, you have a potential double bottom, and if that were to trigger theoretically, then that would technically stop out that 4 hour double top. So that will be interesting if it does rally up there, but the trigger point to there is 38.8325. Then I'll just go through the targets: 3900, 3907, 3915, and that would take us back to the most recent high area. Now, as I said, this was triggered on the 4 hour basis right here. And it was, you try to trigger them on the time frame that they're best formed, and this was best formed on the 4 hour. Even though the 1 hour was the aggressive trigger, the 4 hour gave really nice reward to risk if you waited for the pullback and stalling out against the 50. My key area, though, is this 38.50 area that it really couldn't get below. And the first target is 38.45. So going to keep close eye on that. But this could be an early exit if the double bottom does trigger. with very minimal risk. But those next downside targets below that 38.45, 38.33, 38.22. So that's what we'll be watching for there. Let's see. Let's see if there's anything else I need to touch on right now. Nope. NASDAQ. NASDAQ also triggered. Coming back between the base and the candle bodies, and then the rollover move also catching on that 50 on the 4-hour. So that was the little key move there. Cycles rolling over on the daily, but again, not yet on the weekly. So when the cycles really start to roll over on the weekly, we'll probably get a lot more downside pressure. So that's where that sits. We also have a potential double on the NASDAQ, potential double bottom. So that would be on a close above this peak, coming in at 11,985, 12,078.25, 12,114, and 12,151. Same thing with this trigger on the 4-hour. Then you get the nice pullback move for a much better entry, and then the rollover, and it can be used with the tighter stop on that 1-hour now. Because why? If the 1-hour triggers, then it would take it back above a level that would stop out that 4-hour. So there's no point in holding at that, from my perspective, if it were triggered, because it's just getting out early, and you can even reverse the position. So, but that's waiting for a definitely closed on the close trigger for that. I didn't take the double top trade on ES because it couldn't break the 50 EMA. Is that being too conservative? Yeah. I did test out you can get bounces there, but that was, I still got to go with the probabilities, and the probabilities are we got the bounce and then the rollover play. So from the bigger perspective, that's the trade, and it's out. It triggered out of the way of the 4-hour rotation zone. So that's where that sits. Let's just see here. Dow really didn't do much, and no double bottom. The Dow has not been great with some price action recently, so there's no great setups in the Dow. I'll just probably wait till tomorrow morning because there's nothing sitting here. We're just in consolidation with the Dow. With the Russell does have this little mini double bottom. So for those Russell traders above 1747.30, you have 1755.70 and then 1760. And this is technically the move that started it, but I'd really focus on this first and second target, especially the second target lining up before this little hitch move. So those would be the targets that I'd be watching for the upside trigger. We'll cover the DAX again tomorrow. Just rotation down. I'm really still watching below that 12,750 area for a confirmed rotation down trade with cycles at the top, but not yet confirmed rollover. Crude tried to did not get that 4-hour trigger, and back into consolidation with another move up, and now that's a triple top. So crude is just in consolidation. Nothing going on here. Now I would need a breakdown below today's low to watch for some short price action, because we don't have cycles near the top yet. They're getting there, but there's not yet for a rollover. So now we have two tops right here. It's actually a triple top up in this area. So on a break above about 105, that's to target a potential long play back to 107.60 area, then possibly 109.30. We got, again, that bounce up in natural gas. I'm going to be watching for a potential gap fill play, though, with this. Once we get the cycle rollover, I'll be watching for a gap fill play and a stronger bottoming formation there. What else do we have? Not much going on there. Notes, we got the nice little rally. Now we have these two tops here. Again, two tops, not a double top. But that's essentially the potential get long breakout play above 118.20. with cycles getting near the bottom. No percent B signal today. However, if we do get a close above Friday's high, the high from the 8th tomorrow, that would be a percent B rotation entry up. Also, dollar marched higher, hitting that 108.04 harmonic, then backing off. This dollar is just, I mean, this is just crazy. So next, if it continues its rally, 108.95 is the next target. Key support back at 106.72. The VIX, not a lot with this pretty big. I mean, we had a pretty decent sell off. The Nasdaq had almost 2%, but that's not a big. That's not a much panic in the VIX. I mean, we had the big gap up, but then a very narrow range VIX day. So not a lot of. Not a huge ramp up in volatility. Was that a 15-30 minute head and shoulders on Tesla? I do not use the pre-market to do a head and shoulders. They're just not very reliable. This was a, if you measure this out, that was a double top play right there, which I should have well, I didn't. I could have put that in the good old Discord. I'm sorry, I didn't. But that was the with the volatility. That was the only play intraday with the breakdown. When it triggered, I should have actually come back and put that in. I did not capture that this morning on that low time frame. But when it triggered this morning with the momentum bars, and then it came back down, and then it just cascaded down lower. So I'm actually going to start watching if we close below about 688, then I'm going to really be focused on a retest because statistically it favors a retest down by this roughly 615 to 646 area. So that was the play right there with that double. And then it was just running it down. Now there is a potential little double bottom to watch for tomorrow if it does get that snapback rally move, especially if you get some pricing rallies with those double bottoms in the S&P and NASDAQ and we get that rally pre-market and we gap up, then I'd be watching for this double tomorrow going into the open. Where else are we sitting? Yen, not much after the strong move and then dying out there. Bitcoin, still a confirmed double, but no trigger on it. So it's still sitting in this channel. The only way, again, I can get bullish, and that would be weak bullish, is 21,866 on a closing basis. Otherwise, I'm watching for support to see if it holds right around 19,400. Where do we sit? Does Rivian go from 50 to 25 in Q2? I mean, Rivian announced their layoffs today. I'm thinking it easily retests the lower end of this channel, especially with the next big down push. So Rivian I'm watching for, and then that channel to break again lower. Remember, Rivian coming up with that rotation zone, and now I'm watching for the next lower play in Rivian. Not much else there. What else do we have? Where do we have? HD looks like it triggered a mini double top. I am getting so frustrated with them. Not fixing that yet. That little mini thing on the 15-minute. I mean, that's just a already first target hit. I mean, you could get that pullback to 284. Remember, we had that double bottom trigger right here, and we're getting that pullback between the remember, here's the candle bodies and the peak, and it's in that zone tomorrow. Now we could get a little farther pullback. So again, we have that. That's the bigger play on Home Depot, but the problem is the cycles are at the top. So I'm actually waiting for an even bigger pullback play on that with cycles at the top, unless we get really strong market conditions. Euro. I have to keep forgetting to add that to the list. Euro just, again, tanked today. The next major, well, I'm of course watching parity. Parity, which is just a slightly below where they are, where we are. No great bottoming formation just yet. We don't, that's not a double. The only thing to watch for with the cycles being at the bottom is if we start breaking above about 10072. Then the return area is this 101. But there's no strong major bottoming pattern yet. I am keeping an eye with cycles on the bottom with the 4-hour and the daily. So we'll probably, if this does, I'm focused. If I'm gonna come down and hit this one, the exact one, then I'm watching possibly for a strong little reversal bounce off of that. That's gonna be a magnet. So Q2 going to be fireworks. A strong dollar means big losses and revenue for Apple, Tesla, and Amazon. Yes, a strong dollar is going to hit a lot of the mega caps really hard with their earnings. So do keep that in mind. Also, yes, you added Microsoft in there. Hey, Dan Jet. Yeah, that's a good explanation. Also, though, we could get a technical bounce off of this. Do not forget, especially that once it hits that psychological one-to-one parity with the dollar, we could get a psychological bounce, especially with that being very, very oversold and the dollar being very, very overbought and cycles at the top for that. So that's why I'll be watching for a potential quick little pullback before we don't have a strong topping pattern yet in the dollar and we don't have a strong bottoming pattern yet in the euro. Well, ECB is going to have to hike a bit. Can you guys not hear me anymore? Let me know if you can hear me. Waka Waka says the sound is gone. Hope it's not gone. Is there still a Fed put? Can they step in with inflation this high? I think that's been ruled out. Literally, the Fed put. That's why they keep stressing that they're going to keep hiking until they get inflation under control. From our Fed perspective. All right, thank you. So the sound still is good. So that's what I'm keeping an eye on. Now, remember, again, just a quick reversal move in either up in the euro or down in the, let me add this right now. Since now it's probably a good time to add it and start covering it on the more regular basis. It was you, Waka Waka. You're trying to mute me, aren't you, Waka? What else are we looking at? Microsoft actually held up today. Microsoft, with this little double top, a nice little bounce back move here. Did not trigger on that 4-hour. Did not trigger on that 1-hour with that very sloppy double, almost a triple. I'm not, that's pretty much off the table right now. There just aren't a lot of good setups. That's the problem I'm finding right now is there's just everything's in no man's land. And then you got stuff like coming out in the next few days, Citibank earnings. You know, I'm watching for plays to start setting up. We got Citi on Friday. We got JP Morgan, Morgan Stanley on Thursday. And I'm just not finding short-term, really good short-term setups right now. I mean, all these black lines are for projected moves based off of earnings I'm keeping an eye on. But again, it's just there aren't strong setups. Now, this could be interesting if JP Morgan puts in better numbers. It's almost a sloppy inverse head and shoulders. So we'll keep an eye on that. If I had to do a pairs trade, what would I do? Short Tesla against long some other car company. Short Tesla all day long. Uh, that would be a interesting pairs trade. I don't have any great pairs trade setups at the moment. We're in really tough market conditions. Dollar versus yeah, that's if you wanted to, but that's not, I mean, that's just a currency trade. For me, long Apple, short Amazon. I see. I can't get overly bullish. Uh, I'm gonna have to reach out to them about that. Apple. I mean, I think Amazon will probably be weaker than Apple, but I'd rather something that's going to have a really strong bias from the long side and something with a really weak bias to the short side. And they're not in the same. And if I'm going to match up pairs trades, they're generally in the same industry. So if I was going to find something with Apple, I'll have to think about this because I'm not finding a lot of good things. I can't get that bullish on mega caps, especially with the strong dollar, and they've already come back. I'm going to watch for another significant rollover play. And Apple, I'm still watching. I'm still watching to easily hit 120 on the next pretty big rollover. And then even beyond that, I'm watching for it to come back down to this 102 area. So if ARK is still seeing record inflows, why is the ETF down? Should the money go into the underlying stops and prop up the prices? You've had record inflows even on the. I almost put in SARK. You know, you can still have inflows, and it depends how they deploy the money. All right, but it's just if your selling pressure is too much, then you're still going to get ARK going down because they have to offset. If there's still people, we got that junk rally last week, and then the rollover. I talked about that where just everything got bid in of ARK's holdings. So it almost looked like either somebody was covering a ton of short positions or there was something else going on with an interesting repositioning with something because that gave it a little prop up. But overall, if you get more selling than the ARK buying pressure, you're going to get downward moves. And they're getting inflows. I've not checked it. I know last week they got some inflows. I'll have to see what they're doing today. But I'm expecting at some point we'll get to a more lopsided outflow. And the only thing they got hammered with Tesla today, being down 6.5%. So once Tesla really cracks, that's when it'll get interesting for ARK. Because that's one of the things that's still held them up pretty well. Tesla will be known for the biggest pump then dump in history in a short space in time. Yeah, retail's still buying the dip overall. And more so the street is repositioning itself for longer term bearish moves, but the retail investor is still in buy the dip mode. They're the last to know. So, and they're always more positive than anything else, and there's still money to be positioned out there, obviously. And there's still, with these low interest rates, there's not a lot of places to park money, especially with the way bonds have behaved and your overall treasuries. Yeah, retail buying the dip is telling me we are way off the bottom. Once retail really starts throwing in the towel and you know what? even I hope there's smarter people that watch this channel, so I can't gauge it with this channel really if the views start going down. But you have a lot of these other, I'll call them more pump channels that attract things on YouTube. Once you see views going down on those, like substantially, then I know retail's really throwing in the towel. That's the and that's when the retail gets sick of the market. Like, this thing's just going down. I'm tired of it. I don't want to hear about it. I don't want to watch a YouTube video about it. I'm done. That's when we're closer to the bottom. Meet Kevin. Who's Kevin? Oh, Tom Nash. So that's another thing. If you want to just do some independent research, watch view counts on some of these channels that tend to just pump stocks all the time and keep saying buy the dip, buy the dip, buy the dip. Or channels that pump meme stocks and everything else and just say buy the dip, buy the dip, buy the dip. Because once those views start dropping drastically, then we're going to be closer to the bottom. Just like some of the big Tesla channels are starting to lose their views. People are getting sick of this. I think the tide's turning, and I'm not going to make this a bunch about Elon, but I think the tide is turning more so. No, I don't know Meet Kevin. You're welcome, Anissa. Hope you have a wonderful evening. Once we start seeing the tide turn, that's where things set it. You know, I think at some point you're really going to see the tide turn on Elon. More and more people are starting to tune out of Tesla stuff and just Elon stuff in general. So once that shifts, then I think you'll start to see a rollover move in a lot of these things, and that will really get some momentum going on Tesla stock to the downside. But are we there yet? I don't know. But it seems that people are really getting sick of it with this Twitter stuff. Well, I'm glad it helped on Amazon. Amazon rolled over today. Rather nice. I should have covered that. By the way, there is now a double bottom in here. So just keep an eye on that. If you're still playing this downside, I'm not saying it has to be over, especially if the market keeps going down, because you have a clear path move down here. But just keep an eye from the bearish camp. And why do I say that? I mean, you got to consider this pretty much target hit. I'm pulling this off right now. But from the from the bullish camp, if this does trigger above 113.39, look at the target with the gap fill. So if we get more bullish price action, you now have a potential other play in Amazon to the upside. And again, that's a short-term play only. Okay, so I really like this play. Thanks for reminding me about Amazon. I forgot to put it up here. But you see with this gap play, you got that double that can trigger, and then that can run it up into the gap fill play. So you have essentially two plays in one up right there. And from the gap harmonics, your 62.5 is just above the trigger for this. So even if this pushes lower, I mean, even if it retests tomorrow morning, the low area, that won't invalidate this double. And even if it pushes a bit lower, it won't invalidate the double, and that just brings down the potential gap fill play also. So do keep that in mind for an upside play. Meet Kevin is just another clickbait YouTuber. Okay. He's a mega pumper, bought loads of Tesla shares and buy retail, made millions on way up, and now is using millions on way down. Somebody put a link in to something in that you think I should check out in Discord. And I'm not going to pick on individual people here. I don't highlight other people's channels. I just know that when you start we got into this with the retail aspect of it, with once you see some of these pump channels really losing their viewership, that's where we'll that's where we're getting. I'm not going to call it the bottom. That's where we're getting a lot closer to a bottom. And once you hear the people, because there's been some really bad advice out there. So one of the reasons I have this channel going is because I get tired of all these like just buy the dip, buy the dip, buy the dip, average down, average down, average down. And if people are doing that, especially people have been taught to do that in Tesla, and one of these days you're just going to blow all these people up because it's a load of crap. You have to, I don't care how, this is why I talk about don't get married to a stock. And also, even if you want to try to average into a position or trade it around a core position or something else, you have to know where a stop is. Okay? You have to know where to cut stuff. For example, when I talk about, we're trading around silver in a core position, well, at a potential double, you start breaking down, it's aggressively lighten up or even get out of everything, and then you can reestablish a new position lower if you're still bullish on it. But it's not just buy, 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 because things can go down a long way. Look, with this, once you got into this weekly clear path move, you want to wait for a bigger reversal pattern and really lighten up your position or even get out of it altogether, and then look to get back in if you still have your fundamental bias. So even if you're a mega bull on Tesla, just buying every dip is an idiotic proposition, especially if it breaks below 573, because you could be running this back down, substantially lower prices. So you have to know where a stop is, even if you're a Tesla mega bull. It's not just dump money into it, dump money into it, dump money into it. That's a recipe for disaster. And I don't care what the stock is or what the market is. You have to know where your risk parameters are, because even stuff I'm bullish on can get hit. All right? For example, if uranium really breaks down below and closes below the 62.5, what do you think I have to do? I have to then target the bigger pullback areas. So is it just buy, 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 buy? No. You use a statistical probability and you say, okay, something's shifted. Yes, it's got still a long-term upward bias, but technically something shifted. So I have to respect that. You have to get out, and then you look, if you still have the same fundamental bias or the same long-term position, you look for reversal patterns to reestablish a position. You don't just say, all right, buy it, buy it, buy it, buy it, buy it, kaboom. That's what happens. Then you get the kaboom moment. I'll see. I'm just trying to be real and give people another sense of advice, and I really want people to focus on it. I don't care what you're trading. Focus on risk first. Reward will take care of yourself. Even if you go through drawdowns and have tough market conditions like this, yeah, you can get drawdowns. You can get a series of losing trades. But if you keep your risk tight and you manage it and you lighten up earlier and you don't go in heavy, remember I talked about know your risk parameters, whether it's 2% of each trade of your portfolio or 1%. It's not 30 or 40% of your portfolio for any trade, because that can really damage your portfolio in these market conditions and take you out of the game. Twitter lawyers respond. Twitter hired a very hard hitting firm, by the way. They are amazing at M&A. So Twitter is not messing around, and this gets to go, because it's a Delaware incorporated company, it gets to go to the Delaware Chancery, and that's going to get very interesting for Elon. You're welcome, Chris. So, yeah, thanks, Sterling. Let's just try to get this thoughts out. What are your thoughts on Palantir? Then I'm going to call it a day. I'm a little tired. My energy's a little lower today. Sorry about that. That's a triple on there. That's It's sort of an interesting setup. I mean, it's technically a triple on that time frame. It triggered this little mini double. So this one's off the table because it's a technical. This one did trigger. So I'd just be watching for at least a short-term pullback. Now, since that double is essentially, it's okay on the daily, but you're against this channel area. So really, if you start breaking down, and even you don't even need to wait to the bot peak, I'd start looking at this if you start getting some pretty substantial negative price action below $9, then I'd be easily targeting the other side of this channel pattern. I want to check something else out on. Yeah, look at that. So I'd really watch if you start breaking. You got your double already, so I'd be watching for lower prices already. But if you start breaking below this $9, look where your 50% harmonic is with this channel. That would be my next substantial downside target, and you still have a gap fill down here. Let me bump down that just a bit. So you have a really nice target to the downside area here. With cycles at the top on the daily and cycles at the top on the weekly. And you had a divergence pattern here on the daily. So see lower high RSI, higher high, just eat. So I'd be watching for definitely lower price action there. Twitter can go through a lot more pain though too. And Twitter it's a story stock, and I wouldn't be long Twitter, short Tesla. I would pick one of them, and the preferable one would be Tesla because it's way overvalued. But depends on what happened. Twitter can go through a lot more pain to the downside, so I don't like that as a pair trade. You're welcome. Will I do Amazon? Amazon I already looked at. We have this potential double bottom here. Go back and I'll just recap it. Above 113.39, 114.45, 114.97, 115.50. It already had that little double top play I put out this morning, which essentially hit the targets. That's only, and it has not triggered, so it's not a buy yet. Okay, because if it does continue lower, you're still into a clear path move. And the next target lower, I'd be watching this breakout zone right here. If it does not trigger that double, the next support's about 110, 109.97, so 110. Yeah, I looked at Bitcoin. I'll touch base on that again too. Bitcoin is in this channel. I'm still watching for the key support coming in at 19,460 area at the bottom of this channel. We break down below there, 18,737, and there's still a fair amount of buying pressure down here. It confirmed a double but did not trigger it on a closing basis. The only way I get short-term bullish is if it can close above 21,866, as I said before. And there's no telling what he would do. He would revenge dump it. So that's why I'm just steering clear of Twitter. Yeah, it has downside, but you can get some interesting stuff. And let's say this starts going against Elon. He decides he could, let's just hypothetically say, he gets advice from his lawyers and they countersue, and then it's like, you know what, it's probably going to get jammed down my throat anyways. Let me try to negotiate a price. And Twitter says, all right, we'll give you a discount. Instead of 54.20, you can get it for 48 or 45. And if he's going to get saddled with it anyways, he might, and then you could see Twitter pop in an instant. That's why it's a risk play to me. I'd rather be short Tesla. Why? Because Tesla, it's fundamentals. I mean, you're going into a recession. Automakers do horribly in a recession. Okay, so keep that in mind also. And, you know, you're still P to E ratio 102. I'd rather, if I had to play the anti-Elon thing and just an overvalued stock, it's short over this with the breakdown with against the weekly rotation zone. Well, that's fine. I mean, it's that can be. I like to watch Twitter now just for fun. Again, I mean, I guess if you had gamble money, you just wanted to do a little gamble play on it. You know, it's like, hey, this is a slot machine play. I'm just going to play it for the hell of it, just because I want to do something. But that would be a super small position. That's just like, eh, I mean, that wouldn't be actual trade. That would just be, hey, I want to have fun with this. Yeah, the last 3 days of this week are going to be interesting. CPI, PPI, consumer confidence. So that's where everything's backloaded this week. All right, I'm going to wrap this up. You're welcome, Daniel. Yeah, Pepsi's got. Oh, I looked at Pepsi. Pepsi's tomorrow, earnings tomorrow, the open. I looked at that this weekend and I couldn't find a fantastic play. Why? Because it's in this big pattern here. It's already run up. You got, and it's in this huge consolidation pattern, and there's not a great setup here. So I just couldn't. I mean, you got cycles rolling over. If I had to take a bet, I'm betting to the downside. But even looking at the options, unless they get absolutely slammed, I'm not seeing a lot of great plays in this from a probability standpoint. That's the problem I'm finding. So if you made me take a bet, it would be down to the downside. You're, but I just don't have a great play. And your key support I'd be watching would be at, even on a pullback, even on a miss, would be 167.18. So what I've said before, when I can't find something, I just walk away from it because this is a gamble to me. I mean, you got this. This was a potential double, but now it's a triple. You got your breakdown play, but this is going to be pre-market. So, eh. If you had to do something, if it broke lower, if we do gap down tomorrow, and you want something to watch for, if it does try to pop, let's say there was a gap down closer to, let's even just pretend 168.50, somewhere down here. I'd then watch for at least a partial gap fill and a rollover play. But that's just hypothetical because we don't even know what's going to happen tomorrow. So that's another one. I did look at that this weekend and I couldn't find anything. There's a lot of stuff that there's just not a lot of good setups right now. So I'm going to leave it at that. Hope everyone has a wonderful evening, and I will be back tomorrow. Remind me, we'll take a look at PepsiCo tomorrow morning and see what they did with earnings and see if there is any setup after, depending on what they do post earnings release. With that, I'll talk to everyone later. Bye for now.